It hasn't been all that exciting this week thus far, but what little price action we've seen has at least been interesting in that it has been about markets moving in the opposite direction of some strong trends. Those trends have been about stronger US dollar and higher stocks, and the directional moves this week have been mostly US dollar selling and the smallest of attempts to consider some profit taking on long equities exposure. Some of the bigger picture stories factoring into the flow are further indications in U.S. economic data that the Fed is needing to be moving back to the accommodative side, which has weighed on the buck, and some renewed stress around the state of U.S. trade policy, which could have a negative impact on risk appetite. There is still a lot of work that needs to get done with U.S.-China talks, and we've now been hearing about tension between the U.S. and Europe after the U.S. revealed a list of EU goods that face tariffs in retaliation to Airbus subsidies. The pound has been better bid in 2019 as worst-case fears of a no-deal Brexit come off the table, but is still jittery as it considers next steps. There were some bids that came in on Tuesday after the amended Cooper-Letwin bill passed into law late Monday, with more demand coming from reports on Tuesday that Angela Merkel was prepared to accept a 5-year time limit on the issue of the Irish backstop, but this was later denied and the pound retreated off its daily high as a result. Tuesday's U.S. economic data isn't seen factoring into price action, and the market will also be making sure it's cautious ahead of central bank event risk into Wednesday in the form of the ECB decision and Fed minutes, respectively. That's all for now.